I'd given you an assignment for May 2019, question 3C. Let's do that question. Matatizo Limited has been recording losses for the last few years. The statement of financial position of the company as at that 1st of March 2019 was given below. So we have that extract. The authorized share capital of Matatizo Limited is composed of 5 million equity shares of 10 shillings each and 200,000 10% preference share of 100 each. It was decided during the meeting of the shareholders and directors of the company to carry out a scheme of internal reconstruction with effect from 1st of April 2019 as follows. Now that question was an assignment. For those who attempted, they have an advantage. For those who never attempted, kindly be attempting this assignment, because at least some few online students, they submitted their work. It was to determine where the challenge was. For the physical evening student, I think only 2 who submitted. Do you do your assignments? Let's start from there. You do your assignments, or you are waiting to... Let me insist on doing the assignment. Don't just go with what I just teach here. That one lied to you that things are very easy. Things are not that easy. These are advanced. Things are not that easy. Let me insist. Kindly be attempting the assignment. That's what will make you to understand. I don't want you to get a refer, then you say, I thought refer is very easy. It's easy when you are doing, but when you're attempting, it becomes very hard. And you can only learn, not from the teacher always. Yeah, try to read this thing. You interpret wrongly, I correct you. But when I'm doing it, interpreting everything for you, you assume everything are that smooth. They are not that smooth. You write your own things during an exam, but in your mentality, you did your best. That's not the best. That's a challenge. You know, you'll be competing with the other students who are very serious and committed. I'm not saying that you're not committed because you have made an effort to come to class, but don't just always rely on this. You know, this is not a theory unit. Theory unit is just go through, you just put them in your mind. But for numbers, you need actually, for the advanced, actually for interpret. You see, you better do, and then you get nothing, but at least you attempted. Then you submit. It gives me some motivation. Yeah. Students who attempt the assignment and submit, even if we have never met with online, I always keep them as close friends. So that's someone who is committed. They sacrifice their time so that they can do that assignment. Suspend social media for now. The next 3 months. So now let's do that. Now, the requirement was capital reduction account for Matatizo Limited after completion of internal reconstruction. So you only needed capital reduction account. How do you prepare the capital reduction account? Also, you can prepare ordinary share capital account. The ordinary share capital, we have the balance brought down. Now let's go back to from the statement of financial position. Equity share capital, we had a balance of that. So these are scheme of internal reconstruction. Now let's go to note number 1. Note number 1. Number one. So let's see that paragraph again. That the ordinary share capital of Matatizo Limited is composed of 5 million equity shares of 10 shillings each and 200,000 10% preference share of 100 shillings each. It was decided during the meeting of the shareholders and the director of the company to carry out a scheme of internal reconstruction with effect from 1st of April 2019 as follows. Number one, each equity share is to be designated as a share of 4.5. So they effected a capital reduction. How much was the par value per share? It was 10 shillings. Now to be written down to 4.5 shillings. That means per share, there was a loss of how much? 5.5 per share. So now the total capital sacrificed. The ordinary shareholders sacrificed 5.5 shillings per share. How many shares did we have? They had 3,000 shares. Give me that. To get an amount of 16,500. So this balance brought down, they sacrificed. So the capital reduction, they sacrificed an amount of 16,500. You see that you debit here, you credit here. Ordinary share capital account, they have sacrificed an amount of 16,500. Then you are told that the second sentence, the equity shareholders are to accept a reduction in the nominal value of their shares from 10 shillings to 4.5. In addition, the shareholders are to subscribe for a new issue of shares on the basis of 1 share for every 3 held at a price of 6 shillings per share. Then they effected a rights issue. And the terms of the right was that, in addition, the shareholders are to subscribe for a new issue of share on the basis of 1 ordinary share for every 3 shares held. For every 3 shares, they subscribe for 1 new share. How many shares do we have? What about 3,000? They'll buy how many shares? 1,000, each at an issue price of how much? 6. That means they fetch an amount of 6,000. So that means you'll debit cash account, the amount of 6, then you credit ordinary share capital. Also, there was share premium. They issued 1,000 shares. Remember, it's that to the ordinary share capital, the shares are recognized at par value. How much is the par value? Not 10. The shares were reduced to 4 point. How together? The shares were reduced to 4.5. But they issued the rights issue at 6. So there was a premium of how much per share? 1.5. To the share premium, we take 1,000, each at a premium of 1.5. Here we get 4,500. To the share premium, we take an amount of 50. So that means to the ordinary share capital, they effected a rights issue of which you add an amount of 4,500. The 1,500 will go to the share premium. Number two, the existing preference shares are to be exchanged for a new issue of 55,000, 15% preference share of shillings 100 each, and 500 equity shares of 4.5. The preference share are to be exchanged. Did they sacrifice anything? Yes, they did. We said that to capital reduction account, you credit what the shareholders and the debt holders are sacrificing. And the preference shareholders sacrifice something. Preference shareholders. Now, let's go to the balance sheet. How much was the preference share capital? We had 10,000. Now, this 10,000 was to be exchanged. We are told that The existing preference shares are to be exchanged for a new 55,000, 15% preference share of 100. So they were given 55,000 shares, each at 100, and 500 equity shares of 4.5. Then they were given 500 ordinary shares, each at 4.5. Now I want you to do this. Can you take 55? They were given 55 preference shares each at 100. Take 55 times 100. Then you add, they also were given ordinary shares, 500 each at 4.5. What do you get? 77? But how much was their claim? Their claim was 10, but that 10 was exchanged by how much? 77.50. So how much they sacrificed? 22? 22.50. Good. Number 3. The 12% debenture are to be converted into 15% debenture. Yeah, debenture holder mostly they don't lose. Actually, it was exchanged. The 12% debenture are to be converted into 15% debenture. For them, they sacrifice nothing. A further 1 million or 15% debenture of 100 are to be issued at 70. They accepted. We inject more capital, but you increase the interest rate from 12 to 15. That was the condition. So that will not affect the capital reduction account, will not affect ordinary share. If it was to affect, it will only affect cash account. Are you together? Because they agreed to subscribe 1 million share each at 75. It only could have affected the debenture account as well as the cash account. So has no effect to the account required in this case. Number 4, the directors agree to forego 50% of their own so that you credit anything that the shareholders and the debt holders are sacrificing. Now let's go to the liabilities. Can you see the directors' loan? They are debt how much to the company? 5,000. So directors' loan. Of the 5,000, they sacrificed 50%. The directors agreed to forego 50% of their own. 50% of that. You get an amount of 25. So how much is the balance? The balance was 20. They sacrificed half, so the balance is 25. Then you are told that the balance of the loan, which is 25, is to be settled by the issue of 400 equity shares or 4 point. The balance of 25 to be exchanged. They get how many new shares? 400 each at. Can you take 400 times 4.5? You get 18. Also, they sacrifice an additional amount. Also, directors' loan balance. They decided to forego 50. So that means the balance is 20. But this 25 was exchanged with the new share with a value lower than this. So they got 400 shares, each at 4.5. This is 1,800, but they was to settle this 25. So they sacrifice an additional how much? 7. Number 5. The bank overdraft is to be repaid in full. Now that one could have only affected the cash account. But in this case, we're not required to prepare the cash account. Number 6, all intangible assets and accumulated losses are to be eliminated. Yes. How do you eliminate? In short, you have to write them off. So I said that in our capital reduction, number 1, you have to write off the accumulated losses. Also, the intangible, how much was the accumulated losses? The accumulated losses was an amount of 2,000. And then you are told that in note number 6, all intangible assets and accumulated losses are to be eliminated. So we had other intangible assets such as what? Goodwill. So we have goodwill written off. An amount of 5,000. Also, there was patents and trademark. Patents and trademark, an amount of 500. Number 7, creditors, they are part of debt holders, right? Accepted to be paid half of the amount due at a discount of creditors. They sacrifice. Now, can you compute for me? Let me not interpret everything. How much they sacrifice? Compute that. That one you don't need to write it somewhere. Just use your calculator. How much the creditors sacrificed? I want individual answers. Abu Nasir, how much are you getting? 21? 21 and 50. Just read what you have in 1210. You're getting how much? 1210. 1210. Others are getting what? An amount of 1210. Brand, you are raising your hand. You're getting 1210. Different one. I like different answers. 1320. Lucy, what are you getting? Sorry? 1210. 990. Jane, what are you getting? What are you getting? 990, also same. Ida, what are you getting? 990. 990. So now we have to answer two major answers. 990. The other one was how much? 1210. All the answers are wrong. That's why I told you it's good actually for you to attempt before. This is how things surprise you in an exam. And it's not a hard thing. Let's read that again. The creditors accepted to be paid half. They didn't sacrifice half. Are you together? They accepted, first of all, pay us half. So how much was the creditors? It was 22. They decided to be paid how much? 50%. They are not sacrificing. Are you together? Up to this point, 50% of 22 is 1100. They have not sacrificed. They didn't say that they forego. They accepted. Pay us half. Are you together? Then the balance will pay later. That's what happens. But you're told that creditors accepted to be paid half of the amount. Due at a discount of? The only thing they had to forgo is the discount they given of 10%. So 2200 times 50%, that means the amount payable now was how much? 1100. But that 1100, they had received net of discount of, so they sacrificed that 10% as a discount. Times 10%. You get 100 and good. Then number, yes, that's how things are. Number 8. Assets are to be adjusted to the fair values by the following amount. We say that in this side, we factor in the revaluation what? Gains, say how revaluation? Losses. Now, let's go to planted machinery, the 12 balance. How much was the amount? 30,000, right? Then there was a revaluation loss of how much? There was a loss by how much? Good. Now, what you have in a bite, you don't have to value the asset. We are told that the asset are to be adjusted to their fair values by the following amount, not to the following amount. Are you together? If you're computing the difference between the two, no, that is wrong. So by those who are the revaluation law losses. Good. So for planted machinery, yeah, it's an amount of, yeah, then someone will start arguing. How did you know that it's a loss, not a gain? Then you ask yourself, during construction, what happened to the value of the asset? That was the value they don't gain. 61. Then we have equipment. I lost by that too. That 250. Then receivables. An amount of 1160. Then we have inventory. Amount of 460. Number 9. Share premium account is to be utilized for the purposes of capital reduction. Share premium. How much was the share premium? Yeah, 4,000. But remember, there was another share premium as a result of the right issue. This one is not, that's not what they are sacrificing. They sacrifice what they had before. That's the account. This after reconstruction. So this one will go to the new balance sheet, but what they sacrifice is what they had in the account. Good. What do you get? Which side is more? This one is 23. 060. It's more than this side, right? 26, 060. So how much will be our capital reserve? $75? Yeah. Now this 75.90. We see that capital reserve can be on the debit side or the credit side. What does it mean? You see, this is what they are sacrificing, right? Trait of this. So what they sacrificed was more than what they were supposed to write off. So that means this capital reserve, you add it to the equity. The other one was on the credit, so we deducted from the equity. Good. So give me the balance cut down for the owner share capital. 18,000, eh? Good. So you can copy. Yes. If the question wants you to do what? Eh? Not all, this was not required. It's only that. Now let's look at external reconstruction. That a company can be reconstructed in 2 ways. One was the internal reconstruction, number 2 was external reconstruction. We're right to say that. And this is where the existing company is wound up. This is where the existing company is wound up. The existing company is wound up due to financial problems, due to financial problems, due to financial problems, and its business taken over, and its business taken over, and its business taken over by a new or an existing company. Business taken over by a new or an existing company, by a new or an existing company. Yeah, that's what we call external reconstruction. So in this case, there is a formation of a new company. So that means we have to liquidate the existing company. We see that internal reconstruction, no liquidation. In external reconstruction, in this case, there is liquidation because now the business are being taken over to another company. Anyway, you see that? In this case, for this takeover, comma, the purchase consideration needs to be determined. The purchase consideration needs to be determined. The purchase consideration needs to be determined. Yeah, you see the purchase consideration is the amount that now the new company will have to pay to acquire the net asset of the company facing financial problem. And you see that the purchase consideration will comprise, semicolon, A, amount payable to ordinary shareholders, amount payable to ordinary shareholders, amount payable to ordinary shareholders. Number B or number 2, amount payable to preference shareholders, amount payable to preference shareholders. Number 3, amount payable to debenture holders, amount payable to debenture holders. Then number 4, number D, liquidation stroke reconstruction cost. Liquidation stroke reconstruction cost. I want us to explain the last one, the reconstruction cost. You see that? This will be treated as a preliminary expense. This will be treated as a preliminary expense. This will be treated as a preliminary expense. And therefore, it should be capitalized. And therefore, it should be capitalized. And therefore, it should be capitalized. And then amortized. And then amortized. Should be capitalized. And then amortized over a given period of time. And then amortized over a given period of time. Over a given period of time. Good. So when determining the purchase consideration, that it will entail those 4 items: the amount payable to ordinary shareholders, amount payable to preference shareholders, amount payable to the debenture holders, and then also the reconstruction or liquidation costs will be incurred by the purchasing company. Now let's look at something else. Accounts prepared to cross off the books. Accounts prepared to cross off the books. Accounts prepared to cross off the books. To cross off the books of the company in financial problem. Accounts prepared to cross off the books of the company. To cross off the books of the company in financial problems. Number one, problems, financial problems. Number one, ordinary shareholders members account. Ordinary shareholders members account. Ordinary shareholders members account. Number two, preference shareholders members account. Preference shareholders members account. Number three, debenture account. Debentures account. Debentures account. Another one, vendors account stroke purchasing company account stroke purchasing company account stroke purchasing company account. Then lastly, number 5, realization account. Realization account. Realization account. Yeah, those are the 5 major accounts prepared to close off the books of the company in financial problem. One, we have said that the ordinary shareholders member account, preference shareholders member sundry account, debentures account, vendors of the purchasing company account, and then lastly, realization account. So now let's look at journal entries. Journal entries. Journal entries. Journal entries to record the takeover. Journal entries to record the takeover. Journal entries to record the takeover of the net asset. Record journal entries to record the takeover of the net asset by the purchasing company. By the purchasing company. By the purchasing company. Yeah, so what are the necessary journal entries to record the assets and liability taken over by the new company? Number one, to record the assets taken over, record assets taken over, record assets taken over, semicolon, semicolon. Then what do you debit, what do you credit? You debit assets account, you debit assets account, debit assets account. Then you credit business purchase account, business purchase account, business purchase account. Number two, record liabilities taken over, record liabilities taken over, record liabilities taken over, semicolon. You debit business purchase account, business purchase account. You credit liabilities account, liabilities account, liabilities account. Number three, record goodwill, stroke capital reserve, stroke capital reserve, stroke capital reserve, semicolon, Roman 1, goodwill. In case it's goodwill, what do you debit, what do you credit? You debit goodwill account, you credit business purchase account. Then Roman 2, in case it's a negative goodwill, negative goodwill, also known as the capital reserve. This one goes to the equity. Since it's a reserve, what do you debit? So you debit the business purchase account. Then you credit capital reserve account. Lastly, number four. Record purchase consideration. Record purchase consideration. Record purchase consideration. Record the purchase consideration. You debit. Business purchase account. Debit business purchase account. Debit business purchase account. You credit vendors stroke purchasing company account. Vendors stroke purchasing company account. Vendors stroke purchasing company account. Good. So just a quick recap. When accounting for external reconstruction, the first step, you determine the purchase consideration. You say that the purchase consideration will comprise of four elements. One, amount payable to the ordinary shareholders, payable to the preference shareholder, payable to the debenture holder, and the reconstruction cost. Then, what are some of the accounts prepared to close off the books of the company in financial problem? One, you see this is the ordinary shareholders members account, preference shareholders members account, debentures account, vendors account, and then the realization account. Then what are some of the major journal entries to record the assets takeover? One, you record the assets taken over, you record the liabilities taken over, then you determine the goodwill on acquisition, and then you record the purchase consideration. So I want us to take a small break for 5 minutes and we'll do an illustration. When we come back, we do May 2016. May 2016, question 3. Question 3. Hasara Limited, which has been operating in the telecommunication sector, has been posting successful trading losses. The directors of the company have made a proposal to reconstruct the company by transferring the entire operation of the company to a new entity to be called Zawadi Limited with effect from 1st of April 2016. So now we have Hasara, its business now to be taken over by another company known as Zawadi Limited. So that's an external reconstruction. There is a formation of a new company. The following statement of financial position related to Hasara Limited as at that 1st of March 2016. So you're given that information. Additional information. Zawadi Limited, now that's the new company, issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference share in Hasara Limited. So we start 2 preference shareholders. Zawadi issued ordinary shares. We are told that Zawadi Limited issued 3 new ordinary shares of shillings 10 each for every 7% cumulative preference shares in Hasara Limited. So for every 5 preference share in Hasara Limited, Zawadi issued 3 new ordinary shares. For every 5 preference share, they got 3 new ordinary shares. How many preference shares do you have in Hasara Limited? We had 400. What about 400? For every 5 preference share, you get 3 ordinary shares. What about 400? You'll get how many shares? 240 shares, each at 10. Fully paid each at 10. So that means they were given shares worth 2,400. Then you're told that, second sentence. In addition, the 7% cumulative preference shareholders in Hasara Limited were issued with 2 new 10% preference shares of shillings 10 par value in Zawadi Limited for every 7% cumulative preference share held. Also, in addition of getting the ordinary share, they were given new preference shares. For every 5, we are told that, read again. In addition, the 7% cumulative preference shareholders in Hasara Limited were issued with 2 new 10% preference share of shillings 10 each, of shillings 10 par value in Zawadi Limited for every 7% cumulative preference share. So for every 5 preference share, they were issued with 2 new fully paid preference share in Zawadi. Remember, we had 400 preference share. They'll get how many new preference share? 800 divided by 5 to get 160, right? So 160 preference share, each at 10. Get an amount of 16. Number 2. The preference dividend in Hasara Limited were 3 years in arrears. So we had preference dividends in arrears. So we have the preference share capital. How much is the interest rate or dividend rate? So we have 7% preference share. The share capital was 4,000, so that you get the dividend per annum. But you are told that number 2, the preference dividend in Hasara Limited were 3 years in arrears. So you multiply by 3. So that means the dividend in arrears was 8,000. Yeah, this was the claim to the preference shareholders. How was this amount settled now by the new company? Then the second sentence, we are told that The 7% cumulative preference shareholders in Asara Limited will accept 3 fully paid ordinary shares. So number one, they'll accept ordinary shares. 3 fully paid ordinary shares of shillings 10 each in Zawad Limited and 20 shillings of 8% debenture in Zawad Limited for every other 100 shillings of preference dividend in arrears. So in addition, they were to get a debenture worth shillings 20. Now, can you read that statement again? So this is what it means, that for every 100 shillings of dividend in arrears, they were to receive 3 ordinary shares, and in addition, they get a debenture worth 20 shillings. So for every 100 shillings, they got 3 shares fully paid, and in addition of that 100, they got a debenture worth 20. What about 840? They'll get how many shares? What about 840? They'll get a debenture worth how much? You have 25.2 shares, each at 10, fully paid. That's 252. What about the debentures? 160? 168. Remember, the debentures were in shillings, so you are not converting anything. So the debentures were in shillings. Number 3, the existing 10% debentures. So we are done with the preference shareholders. Remember, you said that when determining the purchase consideration, you determine these 4 elements. 1, amount payable to preference shareholders, amount payable to ordinary shareholders, debenture holders, and the reconstruction cost. So we are done with the preference shareholder. Now we go to debenture holders. How are they settled? To debenture holders. That's number 3. The existing 10% debenture holders in Asara Limited were issued with 5 fully paid ordinary shares of shillings 10 each in Zawad Limited and 40 shillings of 8% debenture for every 100 shillings of 10% debenture. Read that again. So you're told that the existing 10% debenture holder in Asara Limited were issued with 5 fully paid ordinary shares of shillings 10 each in Zawad Limited and a 40 shillings of 8% debenture for every 100 shillings of debenture. So for every 100 shillings of debenture, they were given 5 ordinary shares. And in addition, for every that 100 shillings, they also got another debenture worth 40 shillings. How much was the debenture outstanding? What about 1,000? Is that 1,000? 4,000. What do you get? This one is 200 shares, each at 10. That means they were given how much? 2,000. What about debenture? 1,600. Good. Number 4. The ordinary shareholders. So now you're done with the debenture holder. Now we go to ordinary shareholders. To ordinary shareholders. How are they paid? The ordinary shareholders in Hasara Limited were issued with 2 new ordinary shares of shillings 10 each in Zawad Limited for every 5 ordinary shares held. I hope you're trying to interpret by yourself. Eh? Can you read that again? Don't just wait for me to explain everything. Try to interpret by yourself. For every 5 you get? 2. What about, how many shares did we have? We had 600 shares. So what about 600? You get 240 shares, but they were fully paid, each at 10. So they were given shares worth 2,400. Number 5. The current liabilities of Hasara Limited were taken over by Zawadi Limited at book value. Number 6. The asset of Hasara Limited were taken over by Zawadi Limited at the fair values as follows, given the value of the asset. Number 7. Liquidation expenses of Hasara Limited amounted to 30 and were paid by Zawadi. Yeah, we see that reconstruction of the liquidation cost will be incurred by the purchasing company, of which it forms the part of purchase consideration. So we had liquidation cost. They incurred an amount of 30. They incurred an amount of 30. Then number 6. Number 8. All the above transactions were completed on 1st of April 2016. So now, can you give me the amount the Zawadi Limited will pay to acquire Hasara Limited? Give me the purchase consideration. Get 10 or 50. So that means Zawadi Limited will have to pay 10 for 50 to acquire the net asset of Hasara Limited. Required. The relevant ledger account to cross off the book of Hasara Limited. Now we say that which account prepared to cross off the books of the company in financial problem. We have ordinary shareholder members account, also preference shareholders members sundry account, also the debentures account, also in it, yeah, the vendors or purchasing company account, and then we need to prepare what? Realization account. So kindly, can you pay maximum attention here? Now let's start with the ordinary shareholders member account. Now this is not ordinary share capital account. This is ordinary shareholders members account. So for the ordinary shareholder member account, you take all their wealth. Ordinary share capital, share premium, retained earning, goodwill, that's their wealth. So let's start with the ordinary share capital. How much was the balance go down? 6,000, right? Still under the equity, anything that belongs to the shareholders. We also have revaluation reserve. All the reserve their wealth of the shareholders. So we had revaluation reserve, an amount of 400.8. Also, we had revenue reserves, which is negative. That's what we call accumulated what? Losses. For the accumulated losses in the negative, you do what? You debit, it reduce their claims. So there was accumulated losses, an amount of that 22 point. Then in case there was any goodwill, you write off the goodwill. How much is the goodwill? Goodwill increases the value of the capital. Do you have any goodwill? You write it off. Goodwill, an amount of 120. So that means at the date of takeover, the ordinary shareholders they had a total, a gross claim of 6,400.8. Then this amount was reduced by accumulated losses, goodwill, then some of their wealth, they were paid by Zawadi Limited. Here it is. To ordinary shareholders. They were given ordinary shares worth how much? 24. So they were given ordinary shares by Zawadi Limited worth an 24. So how much the balance? Now the balance, we cross it to the realization account. So how much do you take to the realization account? Remember, you're closing off the books. When you're closing off the books, there will be no balance carried down. So you must close it to another account. So how much is that? How much do you take to the realization account? 58 point? Let's do the same for the preference shareholders member account. First of all, determine their wealth against what they were paid. So to the preference shareholders member account, we start with the preference share capital balance brought down. How much is the opening balance? 4,000. Then their dividend had not been paid for how many years? 3 years. So they had dividend in arrears. So that's their claim. So we had dividend in arrears. How much is the dividend in arrears? Yeah, it was an amount of 840. So that means at the date of takeover, they had a total claim of how much? 40. How are these amounts settled by now by the new company? To preference shareholders. Number one, they were given ordinary share worth 24. They were given ordinary shares by Zawadi worth 24. Then they also given new preference share worth how much? 16. So they were given preference shares worth 1,600. Then to cater for this dividend in arrears, this 840, they were given additional ordinary shares worth 250. So they were given additional ordinary share 252. And then they were also given debentures worth how much? 150. 168. Now the balancing figure, you cross it to the realization account. So how much do you expect to realize? An amount of 100. Do the same for the debentures account. Debentures here in our mingi. How much was the opening balance? It was an amount of? How are these amounts settled? Here it is. To debenture holders. They were given ordinary share, then they were given another debenture. So they were given ordinary share worth 2,000. Then they were given debentures in a value of how much? 16. So their net claim was 4,000. This is 36, right? So how much do they expect to realize? Yeah, so the realization, you cross it with an amount of 400. Then the other account we prepare is the vendor's account or the purchasing company account. Now, this account only records one item. That's the purchase consideration. The purchase consideration. How much was the purchase consideration? It was an amount of 10. Then how was this amount paid? This amount was settled, number one, by Zawadi Limited through the issue of ordinary shares. They also issued preference shares. They also issued debentures. And then there was cash. The cash is to cater for the liquidation cost, an amount of that, of which we say that it will be treated as a preliminary expense. So that means you debit the preliminary expense account and then you credit the cash account, an amount of that. So this should be 10,450, 10,450. Now let's start with the ordinary share. Of this 10,450, to preference shareholder, we had ordinary shares, 24, ordinary share, 252, ordinary shares, 2,000, ordinary shares, 24. Add the total ordinary shares issued. 70. 70.52. They also issued preference share, only one preference share. Only this, an amount of 1,600. They issued 2 debentures. Number one is to pay the dividend in arrears, an amount of 168. Also to pay the debenture holder, an amount of 16. So you get a total of how much? 17.6. Now, can you add the total? We need to give you 10,450. Then lastly, let's prepare the realization account. Now, the realization account is now to close all the other accounts. So what do you take the realization account? Now listen here. The realization account will debit all assets at their net book value. In short, you want to determine whether the asset were taken at a gain or loss. You compare the net asset against the purchase consideration. So you debit all assets at their net book value. Let's go to the balance sheet. And on current asset, we have PPE with an amount of 10,957.4. We have available for sale financial asset, the amount of 647. Goodwill was written off, right? So that one have to write it off. Then we had preliminary expenses, which was an amount of 87.8. Go to the current asset. I said all assets, not on current assets. There was also what? Inventory, an amount of 872.5. We also had account receivables, amount of 689.9. Then there was financial asset at fair value through P&L. Financial asset at fair value, which was an amount of 216.4. Then you capitalize other 2 expenses. Which are those expenses? Number one is the liquidation expenses, as well as the dividend in arrears. Dividends in arrears. Liquidation expenses was an amount of 30. How much was the dividend in arrears? Yeah, the dividend in arrears was 840. Then you credit current liabilities at their carrying amount. Let's go to the current liabilities. And the current liabilities, they had bank holding. The bank overdraft was an amount of 775.8. Then there was accounts payable, an amount of 1962. Then income tax. So we had current tax, an amount of 275.1. Now, if you take the assets minus liability, what do you get? Asset minus liability, you get what? I don't mean the value. What do you get when you take assets minus liability? Net asset is the same as capital, right? So you get the net asset. Now you compare the net asset against what they were paid. And what they were paid is what you call the purchase what? Purchase consideration. How much were they paid? They were paid 10,400 and 10,450. Then we cross off the account. To the ordinary shareholders member account, on the debit side, we see that to the realization account, there was an amount of 58.1. So the ordinary shareholders account, there's an amount of 58.1. Preference shareholders member account, to realization account, you take an amount of 420. You debit, you credit. So preference shareholders account, an amount of 420. And then lastly, to the debentures account, to realization account, an amount of 400. Debentures account, an amount of 400. And these accounts should balance. Remember, you're closing off the books. So Others to add the total asset. I mean the debit, others credit. This one you get 14, 3, 4, 1. What about this? 14, 3, 1. Good. Now that was part A of the question. And I insist this one does not miss. Are we together? Yes. 20 marks. Yes. I said that now you're in serious business. But the good thing is that this is what you do as the first question. If you just follow, this is just the first question. If you do the second question and the third question, these things you'll get them in your fingertips. Then you do practice. They are very easy. Now the problem is that you won't even go through it. So that means on Saturday I have to start afresh. Okay. I won't start on afresh. I'll just assume I have taught you everything. So remember, what do you take to the purchase consideration? Accounts prepared to close off the books, because I'll be asking those questions. Yeah, it's not a must even you have to do. Just brush your eyes. Angalia to the key points. What are you supposed to take there? Sana maswali mnaniangalia hivi mpaka nashangaa, why did you attend that class? And you are the one doing the exam, not me. You should be very dedicated. Forgetting, no, don't forget. Don't forget. You need to be in agreement with your mind. You just tell them, don't forget this. At least for the next 2 months. 2 months. After that, you can forget. Part B of the question. Journal entries to record the relevant transaction in the book of Zawad Limited. What are journal entries? You see that it will comprise of 4 elements. I want to record the assets taken over, liabilities taken over, goodwill, and then you record the purchase. So number B, journal entries. Thought about debiting and crediting. So what do you debit, what do you credit? So A, we start with assets taken over. We say that for the assets taken over, you debit the asset, you credit the business purchase account. And the rules of journal entries always start with what you are debiting. Let's go to note number 6. Note number 6. The assets of Asara Limited were taken over by Zawad Limited at their fair values as follows. So they took over PPE, available for sale, inventories, account receivables, as well as financial asset at fair value. Then you credit the business purchase account. PP, the value was 94.86.8. Available for sale was an amount of 810. Then we had 608.7. We had 477.1. Then we had 216.4. Now add the total. Then you credit the amount. $11,599. Then we have another element of asset that you need to capitalize. What do we capitalize? Yes, we say that liquidation cost or reconstruction cost will be treated as a preliminary expense and therefore should be capitalized. So how do we capitalize? So you'll debit preliminary expense account with an amount of 30. Then you credit the cash account. Amount 30. Number B, we record the liabilities taken over. What are the journal entries for the liabilities taken over? You debit Yeah, you debit the business purchase account. You credit liabilities. Number 5. The current liabilities of Asara Limited were taken over by Zawadi at book value. They were taken at book value. Now let's go to the current liabilities. The current liability, we had bank overdraft. We also had account payables. And then we had current tax. So bank OD, the liabilities are credited 775.8, 1962, 275.1. Then you add the total, you debit to the business purchase account. You get it? 0.9, eh? Number C, what else? Goodwill. How do you get goodwill? Goodwill is the difference between the purchase consideration and the net asset acquired. How much was the purchase consideration? 10,450. You compare against the net asset acquired. How do you get the net asset? It's asset minus liability. Now these are the assets taken over. The total was an amount of 11,599. Then you capitalize the preliminary expenses. An amount of how much? 30. Then you raise total liabilities taken over, which was an amount of 30, 12.9. I repeat, to get the goodwill, you take purchase consideration, then you raise the net asset acquired. For the net asset acquired, it's assets minus liability. You already have the assets taken over, you have the liabilities taken over. If you get a positive value, that means it's a goodwill. Sometimes you also get a negative goodwill. Are you together? Yeah, that means the purchase consideration was less compared to what the acquired. Well, that one becomes a capital reserve. Capital reserve. What are you getting? Positive, negative? So that means it's a goodwill. So for the goodwill, it's an asset. So you debit the goodwill account with an amount of. Then you credit business purchase account. Purchase account 1833.9. Then lastly, number D, you record the purchase consideration. And for the purchase consideration, you debit what? Business purchase account. You credit the vendors account, which was an amount of 10,450. 10,450. Number D, number C, statement of financial position. So you can copy that. You copy or take a screenshot. We still have time. You can copy. We have 30 minutes. Now stop writing. I just want to present the statement of financial position. Then I leave you so that you can copy. Part C of the question, statement of financial position of Zawadi Limited as at 1st of April 2016. Zawadi Limited. Statement of financial position as at 1st of April 2016. Now, this is the easiest part because we're already given the assets taken over. Let's go to note number 6. Note number 6. The assets of Hasara Limited were taken over by Zawadi at their fair values as follows. We have the assets. Start with non-current assets. PPE, the value of 94.86.8. Then there was available for sale financial asset, an amount of 810. Then there was goodwill arising. How much was the goodwill on acquisition? These are the books of the new company now. It was an amount of 18.39. Then you go to the current assets. And at the current assets, still at note number 6, they also took over the inventory, an amount of 608.7. Then account receivables, 477.1. And then we have financial asset at fair value. The short-term financial instrument, 0.4. Now give me the total assets. You get that in? All that to equity and liabilities, we start with equity and reserve. Now for the equity and reserve, now let's be here. The purchase consideration was for 10,450, of which, how was this amount paid? Zawadi issued shares worth how much? 7052. So that will be the ordinary share capital. Zawadi issued 7052 shares. Also, they issued preference share to acquire Hasara Limited. So preference share capital, an amount of 16. Non-current liability. Also, they issued a 10% new debenture. So 10% debentures, an amount of 1768. Then number 5, let's go to note number 5. So that the current liabilities were taken over at their book values. So the assets at the current liability, they'll be transferred now to Zawadi Limited. So we have the current liabilities. What do you have for the current assets? I mean current liability. There was bank overdraft. Bank overdraft, an amount of 775.8. Then we had account payables at an amount of 1962. Then we had the current tax. In current tax was an amount of 275. Let's try to balance that. You get that in? So you'll do more question in our next session.